All right, so let's check the temperatures of different sectors to see which ones may be holding up at all, if there's any. Let's go to the OIHs here. Now, I know oil's heading lower here on demand concerns, but I have to say I read a bunch of notes over the weekend dealing with energy that still forecast Brent prices and WTI prices to tread towards that 130 level in the next 12 months due to supply issues.
Well, oil right now is around 85, 86. I would have expected where the market is right now it to be below 80, so there's still buyers in this, so that could hold true. I think for the economy, I'd love to see it break this area, get back down below 80 in the 60s, then maybe, that's more money in the consumer's pocket. But for now, you take a quick look here at the OIHs. This is your weekly chart. Let's go to the daily. It looks very similar to the SPX, okay, where it's wedging here after a sharp decline. If the OIHs start to get and stay below this 124, or even just say 122 to 124, you could see a retest of this lower level and lower prices. So I don't think this is a safe group right now. It's trading basically correlated to the market.
All right, let's avoid that. Then we go to retail. So Lulu, totally fumbling earnings on Friday. We also had Urban Outfitters, one of the worst performing stocks of last week. Does this obviously not bode well for the sector, or is this kind of like a bargain opportunity here?
Well, if you remember, we spoke before the show saying that maybe earnings start to get affected because with consumer sentiment right now, we saw what happened with Washington. We see what's happening overseas. Maybe finally people are starting to pull it in. And Lulu, I love the shorts and everything, but you might not be buying an $80 pair of, workout shorts. You can go to Champs and get a $30 pair. But anyway, if you look at RTH, you'll see that this actually penetrated this support that should have been resistance, and it also has an ascending channel. So I would say if you want to stay with this group, okay, but if this starts to break below 100 or it violates this 98.76, I would say if you don't want to be long through what could be very high volatility, I would have a high level stop right here.
All right, so we have an OIH avoid, we have retail, wait and see, but get prepared for some downside. Let's go to financials. Evan was saying last week, I don't want to touch this at all. I don't want to even short this sector. I know you do trade this sector. What is the XLF telling you?
Well, this has been a laggard. This has been the wind in your face. This has been actually your slap in the face if you ever tried to be long for more than a day and a half. If you look here, it never even tried to attempt to break above this area here. So I think that, this could break lower, and it could be hard to short, but some might short the XLF below 12. And this is just going to give me clues that if it gets below 12 and starts to accelerate, it's going to take the rest of the market with it. So this is one of my clues that if we break 12, that ascending channel in the SPX or the spiders will break to the downside. And that might even give me more conviction to short the indices for that quick 1 to 3 day break.
All right, so watching banks, let's go to tech. We have a lot of analyst meetings. We have developer conferences this week. Could be some catalysts to the downside or upside. What are the levels you're going to watch?
Okay, so let's take a quick look at the Qs here. The Qs have been stronger, and high beta has been very helpful. Like you saw, like retail, this actually went through this old support that should be resistance, so it was showing some signs of strength. But right now, I would take a look at this accelerated uptrend or ascending channel because everything plays catch up quick. So if the Qs break below 52.85, or I'll use this level again because I want to be consistent, below 52, just get out of the way because you could see an easy move back down to 50, and then if the market gets really ugly on a weekly, could head a lot lower too.
If we do see catalyst for an upside though, where would that level be?
If it holds 52, if it holds that area, I would watch the high beta tech. This has been the area to watch. I'm going to watch it today to see if it can go green, to see if we could hold in there. But they can really turn tail quickly, so you got to be careful.
Would the resistance be what, like 56, 54, 55 in the chart?
Yeah, take a quick look at this chart here again. You see, you have a, same way you have, this ascending channel to the upside, you have a downtrend that's trying to break. So if all of a sudden we do hold in here and it starts to break above and get above 55, I think that would give conviction to the longs to stay with tech. And guys have been trying to stay with tech. It's just so hard when everything else gives you so much pressure.
All right, let's round it out here with the consumer staple ETF, the XLP. So sector up 1% last week, and Sam Stovall noted from S&P that since 9/11, 10 years ago, that consumer staples have actually returned about 6.4% versus the S&P only returning 2.7%. It was the third performing best sector over the last 10 years when we've had so much financial crisis. You think it'll actually hold up?
Well, that's interesting. Well, I guess if you cost average and you don't try and time that and you just put every month, you did better than the S&P. That's why it's good to see relative strength. So if you look here, this actually looks like it should, right? This went through resistance, so this is showing this was a stronger sector. But just like retail, just like tech, came in. If you want to have a tight stop, if you're trading, this is your tight stop. If it breaks and holds below this 29 or 30 area, you could see lower prices. But if it holds here, you know what? It's in the game. So, if you have a long-term view and you want to just keep holding and get that return, like Sam said, it's been, 300% higher than the S&P. Stay with it and just buy in extreme areas like this. But don't buy too much too quick, because this could be a volatile time period this next week.
Especially with consumer sentiment really low. But again, the sector has dividends. So there you go.
Yes.
All right. And we'll be right back talking about high beta tech, specific names, and some quick ways to make some cash. Stay with us.